Good morning, everyone, and welcome to our keynote for the second annual Alere Treasury Experience. My name is Jordan Fuger-Burmeister. I'm the marketing manager over at Alere, and I'll be one of the MCs for our two-day event. We are thrilled to have over 220 attendees from over 80 different companies attending these 2 days of Treasury and finance learning. We're going to kick things off with our keynote, Treasury Technology Through the Looking Glass. Before we get to our introduction from Alere Treasury Services lead and founding partner, Karen Willis, we have a few housekeeping items to take care of. First off, attendees have been placed on mute for the duration of the presentation. Unlike our other sessions, which will have a formal Q&A at the end of their presentations, our speakers for our keynote would like to hear your feedback and questions live. So if you have anything, please feel free to drop it into the chat or into the Q&A portal, and we'll answer them throughout the presentation. We do have a poll at the beginning of our presentation here to gauge kind of where our crowd is at with their Treasury technology. Please respond, and our presenters will use that info to cater our presentation. With that, I will hand it over to Ms. Karen Willis.
Good morning, everyone. Hi, I'm Karen Willis. I'm a partner at Alere, and I manage the Center of Excellence for all of our Treasury practices at Alere. I want to welcome everyone for joining us virtually for the Alere Treasury Experience. We have 2 days of very current and important topics for treasurers that we'll be covering. And I do want to thank Stacy Rosenthal and Matt Monaco for joining us today for the keynote. I'm going to give a little bit of information about their background. They have very impressive experience, and we really appreciate them joining us today. So Stacy Rosenthal is the head of payments and product management and transaction banking at Santander Bank. She brings over 20 years of experience in banking and technology. She's responsible for core payment products and serves as the business lead for the Payment Hub Transformation Initiative. Prior to Santander, Stacy had leadership roles both at Accenture and Swift, and she began her career with Bank of America as a Treasury Solutions Technology and Product Consultant. In 2016, Stacy was honored with the Global Finance's Who's Who in Treasury and Cash Management. Very impressive. Matt Monaco leads the wire payment product management at Santander as well. He is part of the payments transformation team, and he brings significant subject matter expertise in fintech standards and partnerships across cash management. Matt's areas of focus are solution development, risk management, and market management for both domestic and cross-border payments. Matt joined Santander in 2019, and he has 25 years of senior leadership experience, particularly with teams at Swift, CGI, FIS, and JP Morgan. Stacy, I will turn it over to you.
Thanks, Karen, and thanks to the whole Alere organization for inviting Matteo and I to participate in the conference today. We're super excited to talk to you about our personal experiences within banking and the trends that we feel are shaping change in the industry. Matt and I chose to look at things a little bit differently and look at the impact of generations on the way that we do things and the how that we partner to deliver products and services to customers, and specifically around corporate cash management and the industry initiatives that have definitely impacted change over the past 50 to 100 years. So appreciate those who are joining us this morning as we go on this journey together through the looking glass. So I want to just take a minute to share, as Karen mentioned, Matt and I know we are not the most senior people in the industry. We have had a lot of great experience working with partnerships like Alere to really help clients in terms of their treasury transformation. So whether you look back 50 years ago to a very paper-based society, or today where digital and digital forward is really what everybody's looking for, I think the requirements with corporate treasury really remain the same. Visibility to cash, liquidity management, as well as many other requirements that we'll be talking through today. So we're going to take a look back before we look forward and really talk about various key milestones. What's exciting for me is I started my career in a very paper-based environment. And when I joined Bank of America, my role was really to help customers understand the use of technology. It was you can have it our way, and we have to share with you the different formats and ways you could communicate with various banking partners. It was a role that was stood up to help clients understand technology. And when you think about that in 2021, it sounds a little bit, immature and a little bit narrow-minded. But if you think back nearly 20 years ago, customers were fearful of technology. And Matt and I will share with you some of the milestones that really forged change, not only from a technology perspective, but from an industry initiatives perspective. So I want to turn over to Matt to share a little bit about himself as we dive into the presentation. Thanks, Jordan. I know you're teeing up the participants. We do want to hear from you. And before we get into the presentation and discussion today, we are going to be teasing out a poll question, but definitely want to hear your perspectives as we share ours. Your questions. We want to make this an interactive session, especially since this is a virtual experience. And we really are excited because I think Alair's Treasury experience really talks to what we're looking to accomplish today. So yes, for our first poll, go ahead, Matt. The poll popped in.
All right, you want to hit the poll first? So the poll is out there, so please mark your answers. But a little bit on my background. So I have been around for a while. Started off at JP Morgan and then at Swift, where I've seen really transformation happen. So at that point, the early days of Swift, there was an initiative to get corporates onto the Swift network. There was a lot of discussion around integration and standardization to help folks in corporate treasury integrate into their back end. So a lot has transpired since then. I mean, if we go back to SAP and iDoc, and as Stacy had mentioned, it's sort of our format or no format, right? So that has all changed. It's a move to accept not only the old Swift standards like the MT messages, but even moving towards ISO, which is now going to be mandated. So we've got a lot of things happening. We're going to kind of go and have a fun session here, kind of going through the years and talk a little bit about how things have progressed, and especially over the last 20 years. And you're going to see that's pretty evident in the timeline that we're going to present. So let's hit the polling.
Thanks, Matt. So I think what's exciting is our presentation today talks about several different initiatives. And here we even have the technologies that organizations are considering. It is a non-exhaustive list. We did want to hit on some of the key ones that we know are front and center from conversations with customers, as well as a lot of the market research that's out there. So for those of you that have answered, great. For those of you that haven't, if your choice is not out there, we see actually the poll just came up. So thank you, Jordan.
Interesting.
And what's really exciting about this is real-time payments in the lead. No surprise there. And definitely a close second, APIs, cloud, business intelligence, artificial intelligence, RPA, and then other. Karen, Alair, I think you have done a great job because the topics that are near and dear to those that are participating this morning are threaded through your agenda over the next couple of days.
Yes, definitely. We will be covering all of those areas over the next 2 days. So it's very exciting.
Thanks, Karen. Karen, Matt, what do you think? Were you surprised by the poll? Did you think that you'd be seeing different responses from the attendees?
From my perspective, I guess I'm a little surprised about real-time payments because it's still relatively new and not sure how it's going to apply in the corporate universe. Is there a real need for it per se? Cloud, I guess many folks have already adopted, but going back just a few short years, there was many banks that are very hesitant to adopt, cloud technology. So I'm glad to see that sort of really have moved forward. And then APIs, coming in second. I would say that is a very interesting one because it's going to help with integration. not only external to your organization, but even internally, and that sort of communication between various systems as well as your banking partners. I think most banks are adopting some sort of API technology. Swift is starting to move forward, or has slightly, but things are progressing. And I think that's going to be, the real way forward in terms of communication between back office applications and your banking partners going forward.
And Stacy,
Great.
I'll weigh in if you don't mind. I would say I was expecting cloud to be the #1. That seems to be the buzzword of the day. So kind of with Matt, where real time maybe being #1, I would expect it to be in the top 3 as well. And I think with APIs, we're looking at needing more education for corporate clients on what APIs can do for them, and really coming around to trusting APIs.
Yeah, thank you both for your comments. I actually thought APIs would be first and cloud would be second, especially since we're talking about Treasury technology. I think there's still a misnomer in the market that APIs are plumbing and that APIs aren't products. The great work that Nacha and the Clearinghouse and others have done over the past several years around coming up with defined APIs for various payment capabilities, account validation. I think corporates are looking at the various use cases, the bank and technology readiness, and then of course that security, reliability, and trust, Karen, that always comes up in conversation regardless of the technology, regardless of the theme. As we dive into the Treasury requirements, I think it'll crystallize why real-time payments are important to our audience. But as we're speaking, we'd love to hear the 20% that picked other. What other technology were people thinking about? Was it receivables automation? Was it various areas in terms of technology solutions like virtual bank accounts, or decentralizing your payment solutions, or putting in a new Treasury workstation or ERP system? We'd love to hear from you as we go through the conversation today, not only based on the poll, but other questions you may have or information that you want to hear. So Matt, why don't we drive forward as we talk through the conversation today and dig a little bit deeper? When I think about our view through the looking glass, I think of things as the what and the how. And this is where I think real-time payments really comes to life for many corporate treasurers, especially when you talk about those that are more sophisticated. I think the ties to cash management, liquidity management, the certainty and the conversational commerce that comes up with real-time payments that the messaging standard provides, the richness of information to allow for the confirmation of the transaction. I think that's where corporates get super excited. And for those of you that are corporates on the phone today or have a perspective, we'd also like to hear from you on the why of RTP. To me, I think as we get into generational treasury and we talk about the changes, it becomes more front and center. Why faster, more certainty is so important to the corporates that are listening, and it's so important to the conversation. So the what, to me, is back to basics.
Yeah, and let me just add that. Let me just add. So, when you take a look at this particular slide, none of these items are mutually exclusive, right? They all really tie into each other. So when you look at visibility of cash, it needed the standardization, it needed the automation, and that leads to better regulatory compliance by providing more data, which we're going to see in ISO going forward. Certainly, everything had to happen sort of simultaneously to make these improvements for cash management. So I think we're well on our way to making that happen.
Thanks, Matt. I was joking with Matt and Karen and Jordan as we were preparing for the presentation. And those of you that have worked with me, whether it be back at Bank of America or through the years at Swift or here at Santander, often hear the conversation that Matt and I have about back to basics and the language of the standards, and the standards can't work on its own. And when I think back to my own personal experiences, when I joined banking, I likened cash management to my own personal savings and checking account. And I'll never forget my first interview. I came out of technology, mainframe mainframe technology. Many of you on the phone may not even know what that is. And the role was created to help corporates understand the technology that the bank had to offer and how to communicate with their own systems. And I'll never forget, one of the first conversations after I was hired was with a large corporate who was implementing SAP, and SAP did not have the ability to reconcile ACH. ACH was too new a payment instrument. We had to use various check numbers to segregate out the ACH transactions to help the customer reconcile. It was early days of trying to move STP, straight to people, to straight through processing. I'll never forget the conversations with the customer. We went to their office. We actually looked at the way they opened the mail. We looked at the way they paid their vendors. Everything was by check. Now, this is my personal checks. It actually took me several weeks to find them. I don't know how many people still pay by check, but I now view these things as almost a relic in time. I was super excited to find them. But you think about, the standards were different. There weren't standards. The bank had various proprietary formats. There were some industry capabilities, but they were very far from standardized capabilities. BAI was a set of codes. It was not as formalized as it is today. Yet corporates were still hungry for that. Where's my cash? It's 11 a.m. in New York. And I have a Treasury center here. I have a Treasury center in Hong Kong and one in the UK. And I'm having a challenge where decentralized liquidity management is a problem. I don't know where my payments are. When I send them internationally, it's like a black hole. Wow, regulatory is really a big issue. If I work with one bank, KYC is a nightmare. Imagine working with 20. And then at the end of the day, no matter what I do, I want that security, reliability, and trust, that efficiency, which also today is very tightly coupled with automation. And, reconciliation, I can't have an army of people data keying in information. So how do I automate that? And that's where today APIs become so vibrant.
And you remember the conversations around the dongles, right? And so logging into your online systems. Some 15 years ago, Stacey and I were really on the road to educate corporate treasury on, what is SWIFT? It was a very, bank-centric network. The standards were very foreign to corporate treasury. Back then, we were introducing them to the MT messages, which are very, built around banking needs and not very adaptable. And then later in years, we started introducing ISO. So things have really come full forward in terms of the capability, not only of the SWIFT network, but the understanding of standardization and understanding how to communicate with your bank. So because corporate treasury sort of joining or connecting to the bank network forced them to really understand what the standardization is. The online banking system is so very different than really connecting directly from your ERP or cash management system to the bank's network. So there was a lot of education, a lot of integration that needed to be done. And so a lot of things have changed since then. We've really made some great progress.
Well, wow,
Stacey, I just wanted to weigh in for a moment. As Matt said, I don't think the corporates really realize how critical and important SWIFT has been to this change. They have embraced the ISO 20022 and really propagated it, throughout the world. And we'll be talking more about that tomorrow in our payments transformation. But they're doing, they have the new GPI tracker that they're using for payments. There's so much that they're doing to enable ISO globally, and that's really, really important. And I also wanted to mention, in terms of the slide, two areas that are really key is standardization, which of course speaks to the ISO, the new ISO formats. Doing that is just transformative for corporations. To get those formats into your core technology will change so much in terms of, timing, cost, ROI. And then also with the ISOs, you have the end-to-end reference, which travels from the payment through payment confirmation and back to the bank statement. So you can achieve incredible advances in reconciliation. We have clients who have automated their reconciliation up to 95% of their transactions, and they're dealing only with 5% exceptions. So it's just incredible what can be done.
Thanks, Karen, for your comments. Yeah, ISO 20022 is definitely game changing. And for those of you that don't speak the language of standards or ISO, or may be more familiar with domestic standards like EDI or like some of the flat file formats that are out there that are utilized by NACHA, you know, ISO 20022 really is becoming the de facto standard when it comes to payments. Real-time payments, which was rated #1 in the poll, the underlying language, the native capability is leveraging ISO payment messaging. It's also using a lot of the confirmation information. That not only helps with the reconciliation that Karen talked about, it also helps feed really rich data analytics, which we know are so important to corporate customers as well as banks alike. It also can be used to help enrich your fraud screening, your risk management, as well as your bank account management. For those of you that are less familiar with the standards, actually my first job at Swift dating back in 2008 was all around ISO 20022. We were well before our time. We were working with bank-to-bank communication to automate exceptions and investigations and cash reporting. And a lot of those underlying messages today are the messages that power corporate cash management. And it's really exciting to see that come to life. And especially with Swift starting to mandate their migration in 2022, starting with bank-to-bank flows, and the Federal Reserve coming out for comment, re-looking at its implementation to move FedWire also to this global standard. We in America are actually behind the rest of the world who's really embraced ISO. We've seen demonstrative changes, especially in markets like Canada, in the UK, and overseas. And it's really exciting to see that as a trading partner, we also are going to leverage the richness of the standard.
Yeah, well, it did take us 15 years, but we're getting there, right?
But if you think about 15 years, when we start looking at generations and the innovative change that's happening, I think it really is not that much time if we think about the impact and the enablement that's required. Technology had to change. It had to become more robust to be able to handle the standard. Even Swift's announcements this week in terms of cross-border, the Swift platform for digitization, the amount of information available with ISO, and then how you break that down from a data model and what's consumable for things like APIs are become so relevant for our corporate customers and beyond. So Matt, why don't we move forward to the next slide? I know we're super excited about standards and about what technology can bring. But I always think we have to look back and see how far we've come, because as you said, wow, it's 15 years. Some people on the phone may not have even been in cash management that long. But for those of us that really think back to our early days of even banking from a personal perspective, you think about how consumerization, which is such a trend that's impacted Treasury. So we have digitalization, we have globalization, consumerization. It really shows you back from brick and mortar, the advent of the ATM, the launch of the computer, the launch of, mobile technology, text messaging, all the way up to, social networks, how things have really evolved and how people have cognitive dissonance. It's like, why is it so easy in my personal life? I can order a pizza. I can order a taxi. I can track that taxi. I know how much it costs. I know when it's going to get here. I can even order my favorite music, the temperature that I want in the vehicle, know when I'm going to get there. Easy peasy. Why can't I have the same experience with payments and receivables? Why can't I have such a great experience with my banking partner, with my provider? Well, the thing is, technology is now enabling that change. It wasn't for lack of wanting to serve customers in a different way. As bankers, we want to have options for customers, whether they're sophisticated or whether they require proprietary bank offerings. But to me, these generational impacts, these look back, really helps you appreciate how far we've come.
No, there definitely has been a lot of change, and you see culturally, I guess I'm part of that Generation X, interesting enough, but I've seen most of that generation. A lot of changes, and I think the mentality of our client base is changing to more instant and sort of ease of use. You know, you showed your checkbook before, like how many folks online, you know, and some of the other generations like millennials will actually go to the bank or start ordering checks, or do they use checks at all? So everything's kind of like moved to mobile. They understand it, they're very comfortable with it. And so the banking universe also had to make a lot of changes and make it convenient for our client base to interact and send transactions. So who knows what's going to happen? We've got now the next generation alpha, very interesting. So they're on social media. They're going to be sending payment or wire instructions to each other. It's a whole new world. And so certainly the banks are keeping an eye on, you know, how they can participate in that and be part of that transition.
You know, it's really exciting if you think about, you know, I'm from the MTV generation. I mean, MTV and CNN were launched in 1980 and 1981. I remember, you know, playing Atari, you know, Space Invaders, Miss Pac-Man. You know, my brother was this computer genius. He created a alarm system on the door of his room so I couldn't get in there as the little sister. I don't know what I would have been looking for, but nonetheless, we grew up with green screens. And, you know, I think about my first job out of college, we shared an email address across the floor. We were getting contracts back using a fax machine. Matt, you talked about people, will they have checkbooks? Will they even have bank accounts? Because this generation, Generation Alpha, is all about experience. For them, it's ease of use. They are the app generation. They're the social generation. I look at it as the transactions are part of the experience. So how do we provide tools and that certainty that a payment, a receivable, is about the receivable and the information around it? It's not necessarily about the way the bank wants to provide that experience, and how we plug in and work with vendor partners like Alaire, like Treasury Workstation providers to really help ease the change as technology continues to evolve and client experiences change. My first job in banking back in 2003, there was a solution for wires called WANDA. It stood for Windows and not DOS Administration. It was a DialUp platform. Several of you on the phone may not even know what DialUp is. Imagine plugging in your home phone, which many of you probably do not have, and using that to actually transfer information at the slowest speed possible. So I could actually put in and show a client how to do a wire, walk away from this thick client application that had to be installed on the desktop. I could have coffee, I could have a conversation with Matteo, come back to my desk, that wire still may not have happened. And the early days of what we used to call thin client experiences, websites, you know, showing customers how to do their receivables and their payables. And also the advent of the lockbox tour. Clients used to love visiting the lockbox to see the way we would image their checks, the life of a check that would go off on its way for processing, the rubber banding technology to pull the information off to then send the file back to customers, only in two different formats, BAI or EDI, so that they can automate their receivables process. Early days of bill payment and presentment, half of those vendors don't even exist anymore, or they were acquired by FIS or Fiserv. And they've totally gone by the wayside. The CheckFreeze of the world, the BCG Emergis. I mean, you name it. Early days of companies integrating credit card and ACH. I mean, so much change happened if you look over several years. I mean, you didn't have 24-hour ATMs. You didn't have the concept of, you know, using apps. This new app generation where payments and receivables are part of the experience definitely is game changing and putting us all on our toes, which is why the need to have more robust information and services that are inside other capabilities. So Matt, you probably have some various experiences. I remember using my BlackBerry on the train.
Well,
probably
when you talk,
don't even know what a BlackBerry is.
When you talk about dial-up, what's very interesting, maybe even hard to believe, is that the SWIFT network, which banks really pretty much rely on for all communication and the processing wires, we're using dial-up. As little as 15 years ago, I mean, there was a requirement from SWIFT where they had to dial in so many times a day. So if there are transactions, they could just be sitting on the SWIFT network until they dial in and connect to the network. So it wasn't just at a sort of personal usage, it was actually the banks. So that's, I think, it's pretty much all gone away with the advent of broadband and further technology to allow the security around the common internet, which did not exist really, or was not trustworthy, I think, 15 years ago. So that's really transformed the way banks communicate and sort of that always live status that they currently have.
I mean, when you think about, early cell phone usage, a cell phone was the size of a brick and people were carrying it around like it was a briefcase. And most of them were like transistor type radios. And it was, 1992 that the first text message was sent. And it happened to be people in the Motorola lab and, who were sending Merry Christmas to one another. It wasn't until many years later that the technology was robust enough to allow for even, the first calendar, the first Google Maps capability. It was back in 2007 that you really had the first smartphone concept. So it wasn't so long ago. When you start thinking about Generation Alpha, they really talk about the use of voice capabilities. Many of us see this in our personal lives, whether it's Siri or Alexa. People are seeing early chatbot capabilities offered by banking institutions, use of biometrics and other methods. But really, how do we now evolve what we're doing, keeping requirements in mind and all of the changes that are happening in the market with the theme of security, reliability, trust, knowing that we still have to be mindful of all the regulatory compliance our corporations need to do. So we probably want to look a little bit into what's happening in the industry, looking back and looking forward, but we would love to hear from those who are listening to see if there are innovations or things on your mind as we're continuing our conversation today. As you can tell, Matt and I are super excited about what's happened in the industry and where things are going, but know that we too need to make change. It's no longer an environment of banks offering it specifically in a proprietary way. There have to be options and capabilities for our customers. There have to be the ability to work with various partnerships, knowing that Treasury is moving to the cloud, knowing that APIs are relevant and have the ability to remove friction from the process, knowing that we have to continue to drive education and awareness to our customers and create simple ways for people to do things. To us, we love to talk about payments. We love to talk about the pain of what could happen with the receivables process gone wrong and all the things we can do to minimize your exceptions. But how do we get it right so that a customer can come and say, you know what, I need to centralize my receivables and look at it in a different way. Or I'm implementing a new Treasury workstation and I really want to leverage ISO 20022. What does that look like for me? Clients no longer want to speak in check, ACH, wire, and RTP. They want to talk about a transaction, what it's about, when they need it, how they need it, and they want us to make it automatically happen. And partnerships with Alaire and several of the vendors that they have who are showcasing over the next 2 days are really what's helping drive change in the industry and keeping it simple for our corporate customers.
Very well said. Yes.
Do you want to go to the next slide in terms
I will
of the...
go to the next slide. And before I do, if anyone's interested in old technology and want to be the first user, well, go back to the first iPhone. The one pictured here is actually on eBay for $25,000. So if you're so inclined, you can be the owner of that one. So let's go.
Sorry, Matt. When I think about iPhone technology, and phones are really a good way to think about it. You know, there's no longer really pay phones around. And I even saw that, I think it's Motorola that wants to come back and bring the flip phone back. And they're even trying to figure out a way to make smartphones flip phones, because people are feeling as though it's sort of cool to go back and look like it's traditional, but they want all the features of what's available on an iPhone or a smartphone, but they want to bring back that cool flip phone technology. I wonder if they're going to bring back those antennas too.
Yeah, well, I don't know about that, but the flip phone is actually here already. So this is kind of an interesting chart as we look back or forward, whichever way you want to look at this. But you see there's a lot of nothing on the left, right? It's very slow in terms of where we came from a banking or an industry. And then you hit really 2010s and there's all these things. And we didn't include, you know, this is just a fraction of what's happening in the market today. There's just an enormous amount of change in payments that happening over the last 10 years. And, you know, corporate treasury is going to be really the benefit. They're going to see the benefits of all this transformation and change and new technology and integration. That's all just been really matured recently. So certainly it's a great time to be in payments and corporate treasury as well.
You know, Matt and I, when we were looking at this chart, we were looking at how 50s to the 80s, how much innovation there was. Then there was a bit of a chasm, and then a lot of innovation in the early 2000s, and then things have really picked up over the last decade. And a lot of this demonstrative change has been enabled by the, you know, introduction of new technology, faster speeds of information, the ability to consume information in a different way. And what things like real-time payments with the clearinghouse and FedNow being planned for next year, it's really allowed the conversation with customers to change around looking at their payment mix and their receivables mix. When you think, well, Nacha was launched in the late 70s, it wasn't until the early 2000s that Nacha was truly utilized in a more commercial way, when the FDIC and banks got involved with Nacha. So the early days, it was a pilot focused around payroll with the Navy. I know when I started my first job, I got a paycheck, and today you can't come to a new job without requiring direct deposit, or even clients who are asking to get things in a different way, such as Zelle or Venmo, or asking, hey, when are those simplified capabilities going to be available for companies? You know, some of you may not have lived through the Y2K bug, which was basically the concern that the year dates weren't long enough for the change to the year 2000. And there was concern that computers and processing was just going to stop, and it was going to impact every single industry. So a lot of investment that year and years before that was to ensure that the world was not going to stop because of it. But the early 2000s were all about moving to the internet, and the early treasury management websites offered by banks were mostly informational, trying to move a lot of the desktop capability to the internet. Several of them were more storefronts of information. They weren't necessarily fully available. They were basically more marketing storefronts than they were transactional. And then within 2003 to 2008, you saw a lot more robust movement in the marketplace, a lot more usage of the internet technologies, but you still had things via file transmission for those larger corporates. You also saw in between 2005 and 2010 where SWIFT became really vibrant to those global corporates and large corporates who wanted to have a more standardized way to talk to their banks. And Matt talked earlier in our discussion today about the dongles. Many of you may know them as key fobs, or basically the capability for you to log into various bank websites. But several corporations were investing in ERP capabilities and TMS capabilities, and wanted their users utilizing those front ends and having the bank information or files pushed to the bank to process.
Yeah, the difficulty around that. The difficulty
ahead.
around that was the transformational piece, right? So you had to have some sort of middleware back in the day, because ERP or TMS application just couldn't speak the language of the bank. And so that really caused a growth in organizations that are creating middleware to help with that integration. I think today you see better integration or capability in ERP, in the TMS application. And when I was at FIS, I mean, integration and standardization was very important in terms of being able to provide that instantly in the package and built in. And certainly with all of the ERP and TMS applications today, they all have that built in. So it makes it a lot easier in terms of integration and onboarding of the new system and moving forward.
Yeah, Matt,
Yeah.
I think we're seeing that significantly. That's really the key. I've personally been involved in ERP TMS integration for years, and it was a lot of custom programming. It's very, very exciting to see these connectivity hubs, payment hubs, data hubs, and that they really come out of the box. And ISO 20022 is the core, even though they do still support the other mechanisms like NACHA and EDI 20. So they, it's just amazing what is available straight out of the box today.
Yeah, that definitely helps the client with the onboarding, and certainly helps you get the clients up and running faster than
Very
ever before.
fast.
Yeah.
There's a lot of more configuration that's available today than there was before. And technology, especially with cloud enablement, the managed service capability, the robust formats that can support the various clearings, it helps you focus on the integration points and really creating efficiencies in the process. It used to be, okay, you're going to do a Treasury implementation, and we'd hear from customers, well, the next 3 years, we're going to be implementing a new Treasury workstation or a new payments factory, which for years was like a taboo, but they're now back in style. They're the modern day payments hubs, if you like. Virtual accounts were a big challenge early on. And what we've seen with a lot of the industry initiatives that are definitely driving innovation, driving the requirements to have robust confirmations, more certainty in processing by having more processing windows. It's now allowing corporates to really focus on the points of integration, driving change with technology, and really focusing on exception management. We definitely want to hear from those who are on the phone today. We are, excited, as you can tell, about all the evolution that's happening within the industry. We here at Santander partner with Alair as well as all the Treasury Workstation and ERP providers, because to us, it's no longer about doing transactions our way. Banks have had to make change just like vendors in the market because of the pace of change that's happening. And to us, we will continue to see change. And, Matt and Karen, I'd love to hear from you about kind of your predictions looking forward. We took some time looking back to help people really appreciate how far we've come and the importance of collaboration and integration and the vibrance of what people were talking about and answered the poll early on, whether it be cloud enablement, whether it be enabling real-time payments, domestic or cross-border, or looking at things like integration via APIs. I think it's really important for us to continue to educate and drive awareness and showcase the importance that APIs just aren't plumbing the things that they can be doing to enable the flow of confirmation information reporting, as well as the ability to make payments securely, which I think is what everybody's end game is.
Yes, Stacey, I'll weigh in. What we're really seeing in our advisory when we're working with the future state is that digital wallets, the virtual cards, definitely API integration to ERPs. So the API is really going to be the key. And then the last and a little bit controversial, we'll talk about it more tomorrow, is of course the blockchain distributed ledger. So people are usually on one side or the other of the fence. There seems to be no in between there. Jamie Dimon's one of them, for example. But those are really the 4 key elements that we're seeing in addition to cloud TMS.
Thanks, Karen. Yeah, we definitely, and Matt and I ran out of space on the slide. And one of the things that we see, especially now that central bank digital currencies looking at, especially the Federal Reserve announcing their particular white paper and their pilot in that area, we see a lot of promise with blockchain, especially around KYC, security, and a lot of the records management and analytics. So we definitely see the promise of what distributed ledger can do. We also see that AI and RPA is going to be front and center. And of course, the use of business intelligence and analytics. But to me, I think we want to continue to support customers with the various ways of integration. I think, you said it best. We want to ERP and TMS integration, leveraging APIs is the new way forward. And as companies are moving from file-based or MQ-based or more legacy integration points, I think helping them understand the security, reliability, and trust built into APIs is going to be critical. Yep. And also banks offering some more standardized capabilities there. I think we have to come up the curve. Europe is more advanced, especially with the open banking market and consumer. But we definitely have learned a lot from that and see some logical promises there.
Matt? Yeah, I would just add, so yeah, API is very important. Certainly integration is top of mind when you're putting in a new system, whatnot. I think for corporate treasury, of all things, and I'm not sure how many folks that we probably should have polled this are aware of Swift GPI. It might be a new term for you, it may not be, but from corporate treasurer standpoint, this is going to be a game changer. Banks like Santander are building out the capability to track your wire. So you can see like your FedEx package, and I think there's probably a session on it later on, but certainly pay attention to it. Track your wire wherever it is and get information about fees, and basically where it is and when it's been received at the beneficiary. So from a corporate treasurer standpoint, you now are not blind to your wire instruction. You just don't send it out and it's sort of magically will end up at the beneficiary. You can now see its progression. And so banks are building out that capability, and it's going to be provided as Santander does today for you as a corporate treasurer. So again, better visibility, and that would be certainly something I would keep my eye on as we move forward.
And I know there's a question from Cheryl about universal account verification. I know that Swift is looking at building out GPI, as well as they have some data validation services when it comes to pre-validation of payments. There are discussions around due diligence, expansion around their KYC registry and some of the capabilities that are available. There's also been work domestically from an API perspective with the Finis looking at account validation, still at an individual financial institution level, but something that I think at an industry level, there is an appetite for industry solutions to solve that common challenge. So more to come there. I think in the meantime, it will be handled at a more regional basis, but something that I know Swift as well as other consortiums are looking to tackle to figure out how to take some of the burden out of that at the endpoints. I think due to domestic regulatory compliance and some of those challenges, the how that will be done, but there definitely is ambition there. There's also a question from Sheila around the use of paper checks and whether they will disappear in the future. I think what we've seen over the past year and a half with COVID is the interest in moving further to electronic or digital solutions. We saw, in the early 2000s, the move with Check 21 to images and image transmissions and really electronifying receivables. Now there's the interest in everybody turning digital or going digital. Being that banks and vendors alike have figured out a way to make paper checks image-based, to digitize the information, to ease reconciliation, there are still some industries where the checks are alive and well. However, banking institutions, vendors out there offering several solutions to really automate vendor payments and other types of payments. I think we will see continued change where checks will minimize as other payment types and information around it is available. However, as long as there are solutions that are out there to make payments feel digital and industries that still have cultural biases, checks are probably here for the next 5 to 10 years. We've been talking about the death of the check since the beginning of my career, even spanning before I came into banking. But I think we are getting closer to making those changes. And the advent of ISO 20022, introduction of real-time payments and other capabilities will, and as we help customers see how they can have automated solutions that look and feel like a check in another way, I think you'll start to see those numbers minimize. But we still do see heavy use of checks in certain industries and continue to drive awareness on how companies can move and convert from checks to other payment methods.
And you mentioned Check 21. I wonder how many folks know what that initiative was, but it's in the past. Imagine taking checks and making them digital. So it's part of the initiative. Any more questions?
So, time flies when we're having fun for sure. It looks like there's a question about how the evaluation of TMS platforms and implementations have changed and how banks and corporates are going to track innovation in the market and evaluating systems to determine what's right for them. So I think what's changed is there's a lot more collaboration. Companies are very comfortable getting their bank and their vendors in the room. Also, the cross-functional teams that get together to create the RFP and work together with the process. And the implementation process is much more simplified because of the managed service cloud-based solutions and a lot of the richness and sophistication that Treasury workstations and ERPs provide in terms of having a lot of the formats available. I'd love to hear from you, Karen, since this really is the core of your business and something that I know you've led for many years, not only at Alair, but previously. I'd love to hear from you about the evolution of TMS evaluation and implementations.
Yeah, we do perform a number of RFPs. There's really strong players in the market. We'll be showing some of their logos tomorrow. We also have FIS and Kyriba participating in this conference, which are very, very strong products and with so many services. But I think the real game changer is the fact that those vendors have invested in a library of all the banks and connecting to all the banks, both for statements and for payments. And that library being ready to go, it's tried and true integration that they've done, thousands of times. It's so fast, you can connect to a bank in a matter of days. And the banks understand they're ready to go. Like, they understand how this all works. They've been through it with the different vendors. So that is so different than historically the ERP TMSs. And just, we used to have projects that lasted 6, 12, 18 months because of all of that integration was built from the ground up and it was custom. Now it's ready to go. And the list of banks is huge. There'll be 2,000 banks across the globe that the vendors already connect to. And that is just really, really impressive.
Yeah. So, and I relay that back to my days of being an account manager for GE, and it would take them, let's say, initially 18 months, maybe even 2 years to get a new bank on board. With Swift, that cut it in half. And so they were quite impressed by that. But there was a lot of transformation that needed to happen, a lot of education. I bet you it's 1/3 of that now.
Mm-hmm.
So things have really progressed for them. Especially when you're dealing with 200.
Too is there is a Swift component to all of these packages as well. There is a Swift concentrator and also Swift messaging that is supported within the vendor TMS.
That bank onboarding simplification, I think people really didn't realize the heavy lift that it used to be. having to figure out a different way to work with each and every bank partner. And whether you're utilizing SWIFT or whether you're utilizing other capabilities that you want to use ISO outside of SWIFT or have some type of standardized way, the work that the Treasury workstation providers have done to really simplify that, to ease, the complexity, that really has helped corporates save time, money, and realize benefits so much simpler. So many corporates have shared with us interest in doing a project, but concerns around not having technology resources to do so. And I think the maturity of the bank onboarding practices, the partnerships that have been forged, not only with vendors like yourself, Karen, but like, FIS and Kariba, really has changed the way banks view corporates and corporates view their banking partners. I think having everybody around the table, the business, technology, risk, operations, your partners in the room, helping understand the requirements, the current pain points, not only allow you to enable technology, but really allow you to make change in your process. So one thing I would implore to those that are listening is really, when you are planning a project, make time for that evolution or that change to create process efficiency. We're all here to help. It's not just about turning the technology on. It's about having the technology come to life and work for you to support your business process and make it better. So no longer STP is straight to people, it's straight through processing and that ease towards automation. So Matt, time flies when we're having fun. I really love having this conversation with you and Karen, and excited to spend time here at the Alair Treasury Experience. I know I'll be making time in my calendar to participate over the next 2 days, and I implore all of those who are listening to do as well. Next up is data analytics, Treasury's information frontier. For those of you who've spent time with us this morning, I really appreciate it. And once again, thanks Karen and to the whole Alair team for inviting Matteo and I.
Yes,
We'd love to hear from you, whether it's during the chat or after the conference. Matt, Karen, I don't know if you have final words through the looking glass as we close the session today.
Just want to thank you guys for participating. It was a great conversation.
Yes, thank you everyone, and hopefully it was fun.
Thank you everyone for
Cheers.
joining. Just a quick reminder, if you are following on Twitter or LinkedIn, to use the hashtag ETE 2021. We're going to be giving out some Alair swag as well as gift cards throughout the event. So make sure to check that out on LinkedIn and Twitter. Otherwise, we will see you next on data analytics. Thank you.
Thank you. Bye.